Well, unfortunately, I was planning on making this all one video. However, when I clicked I had to take a phone call, and when I clicked the resume button, I accidentally exited the video. So now I'm just going to start the 26th over with, and hopefully so I'm going to pick up right where I left off from the prior video, which is just labeled market review, or the SPY review, February the 25th, 2019. Either way, so on the prior day, which was the 25th, we had a gap up and really an endless pullback, if you want to call it that. Arguably a breakout on a higher time frame, and we got a bear breakout below a bull channel. And as you know, as I was talking about on the prior video, 75% chance it'll fail, and we get a test of the top of the channel. So not a good sell below. We're breaking below a channel, not a good buy. Big risk, fairly tight breakout here. But I think we'll get up to here, probably up to here at some point. Low one short, but again, doji. This is a credible buy. It's a double bottom. With here, strong stop entry closing when it's low. Reasonable buy betting on the low of the day. Maybe 30% chance it's the low of the day, maybe a little more. But I think it's a 40% chance, if not better, that you'll at least get 2 legs up. So in other words, what I'm saying is I think there's a very reasonable chance you can avoid a loss buying above it if you're quick to make decisions. However, on the very next bar, this is a difficult choice, but it's subtle. This bar is not strong enough to create a strong second entry short. It did not close on its low. Maybe if it would have looked like this with the bigger bear body up here at the top of the chart, maybe traders would sell it. However, this is not a great short, which is why everybody bought it, and we got a strong buy vacuum test of the top of the trend line. Now the issue here is this a strong breakout? And I think it's a surprise, so I think you'll get a second leg. But my concern is 2 legs up. So first leg pullback second, or first leg pullback second. Could be a second leg trap. We will have to see what the follow through is. I think it's okay to buy the close. However, if you do buy the close, whoops, I went to the wrong. Yep. If you do buy the close, you have to be prepared for this. I'm trying to fix this bar spacing. Oh, duh, I didn't even think about that. I could do it like that. Okay, so really what I wanted to do is maybe something like that. There we go. So it just shows that it's more clean. Anyways, bad follow through. Stop entry short. Tail on bottom. I still think we'll get a second leg up. So I don't know. Do you get out of shorts? I probably would. I'd get out of shorts below. I don't think we'll go much higher. I think we'll go sideways. And again, like I said, potential second leg trap. And bulls getting out of break even that bought the close, scaled in lower. I would definitely get out of shorts. I'd definitely get out of longs below this bar. Consider going short. And here again, if I was short, I would stay short, stop above here. At this point, this happens a lot in tight trading range. You're selling in a tight trading range. Some traders will sell 50% higher, so it's kind of one of those things where it's reasonable to, if you're willing to sell here, the stop's up here. I would get out above the double top. I would not get out above that bar. Too much risk. You go out, you trigger the stop and go down, and you are at resistance. So this could be some sort of double top and maybe a measure move down. And that's exactly what I meant, 50% pullback. Here, maybe a triangle, 3 pushes, 1, 2, 3. So reasonable, again, reasonable sell, tight trading range though. I would definitely get out of longs though. And then, some traders will sell here. Breakout, but, maybe testing down here. So the bulls want a higher low. And so real quick, why are we doing this? Well, where's the trend line break? We have not had a significant trend line break of this bear trend. We tested the top of the trend line, which was expected, but the bulls want to see, everybody wants to see a strong trend line break and then a pullback. So this is minor, but what we don't know is is it strong enough to lead to any pullback will lead to a major trend reversal. That we don't know. So I would not buy at 50% betting that we'll get a higher low and a major trend reversal. I'd want to stop entry. A lot of bear bars. And there's your issue. So now we're getting a double bottom, and you have to be open to some sort of measured move down. So reasonable to sell. If you do sell, you're selling at the bottom, and this is, again, you have to be worried that we're converting into a trading range and not resuming the bear trend. So here, what would I do? I would definitely get out of longs, get out of shorts above the bar. Personally, I'm not sure if it's an okay sell. However, like I was just going to say, I'm not sure. You may need a second leg. So it's reasonable to buy, or you can wait and see what the follow through looks like. If I was going to buy, I would not get out down here. I would use maybe a 40, 50 cent stop below. Strong follow through, always in long, probably going up here, and may try and get a measured move up. So lower low, major trend reversal, double bottom, major trend reversal, doesn't matter. Reasonable buy. Strong follow through. At this point, I'm hoping we get a measured move up to here. But again, I want to see what the breakout above this range looks like. Will we get another bar like this, or is this just the trend line break and we're getting more of a trend line break from this channel? So in other words, bear channel, two-legged trend line break, and then we get a pullback to some sort of major trend reversal. And then again, a little bit disappointing. I still think we'll go a little higher. However, I'm suspicious. We just went above a major low. So I think we're in a bull trend or trading range, but I don't know how deep the pullback will be. And now I'm disappointed. So you don't have to get out of shorts here. I would. I don't think we're going much higher. And, again, you could buy here, may go a little bit higher. And there you go. So personally, you can see a lot of traders sold, made money. If they bought, they scalped out, they sold above these highs. So I'd wait for a second entry buy if I was going to get long again. And that's your reason. So, the issue, although, I'll just point it out, look over here. And I just want to cover this real quick. You can stay long up here and still avoid loss. There's a very high probability this is the low of the day, and we'll get more of a retest than just this high. However, most of the time you go sideways. So, just because it's not always the best thing to stay long. And which leads me to cover something else that I meant to cover in the prior video. One thing I would recommend doing, and I just built this yesterday, really just for fun to kind of review it myself, but also to kind of talk about it, just a quick probability table. In other words, all it is, if you're risking 1 point to make 1 point, or 4 points to make 4 points, it's a 1-to-1 risk reward. So if you're 60% profitable, all that means, I just made it very simple. I took in other words, 1 unit. 1 unit at 60% or 0.6 minus 1 unit at 40% equals 0.2. Now, before everybody gets, don't think too far into that. All that means is it's the trader's equation. The probability of success times the reward. It's the probability of success times the reward minus the probability of failure times the risk. I have it a little backwards, but it's the same thing. Here it's just so in other words, my reward is 1, my probability of success is 60%, minus my risk of 1, and my probability of failure, which is 1 minus 0.60%, which is 40%. So all I want to point out with that is 0.4 is it's not great, it's profitable, but it's kind of the minimum. So when you hear I'll say 40%, at 40%, if you're 2 to 1, if you're going for twice your risk at 40%, that's the minimum you need. Well, yes, that gives you 0.2. So all that really means is it's profitable. It's not, significantly profitable, but it's profitable. So what I want to paint the picture of is, let's say you're risking 2 points to make 1 point. That's right here. And then if you're risking, let's say, 1 point to make 2 points. I have it backwards, but I just like it that way. So in other words, I say risk reward. However, over here it's flipped. It's really reward, and here's your risk. I don't know, I've just always done it like that. So again, this means your reward is 2, your risk is 1. Your reward is 1, your risk is 2. Your reward is 1. I'm sorry. Your reward is 1, your risk is 3. So if you think about it, if you're risking 1 point, if you're risking 2 points to make 1 and you're 60% profitable, you're negative. If you're 70% profitable, you'll get a 0.1. That's worse than this. So I bring this up for this example here. Probability of price going up here. What's the probability you go up to here before you get stopped out? In other words, a 1-to-1 risk reward, even though it's technically worse than 1-to-1 because your stop's down here. Well, are you 60% certain you'll get up to here before you don't? I'm not. However, I'm higher than 60% certain we'll get a second leg up, which makes me very confident in holding. However, because it's not a 60% chance you'll get a measure move up, it's the same thing over here. It's not really a 60% chance you're going to measure move up. Maybe it is. However, by the time you get this far, it's definitely not. So you got to think about, how great of math is that? If you're 70% profitable at 1-to-1, it's better. All I'm really trying, I don't want to talk too much about probabilities because that can bore people. And although it's important with trading, you just kind of have to think through that on your own. All I'm saying is this. The math is significantly better for a trader to try and buy a 50% pullback, betting, then they're risking from here to here, and maybe the reward is up to here. Either way, here, it's not a 60% chance you're going to go up to here at this point, so a lot of traders will just get out. I would definitely get out shorts here. Maybe a surprise. Again, second entry buy, but my concern is the bulls just gave up. And if they just gave up, this is the trading range we're in right now. So what I'm not sure is, was this a failed breakout of this high, and now we're trying to break above this high over here again, which in that case we failed. And you can see what's happening. So what are we doing here? Well, we're channeling back. Traders are also buying at 50%. So on one hand, the bears are not getting, right here, so many traders bought at 50% that they bought at 50% and scalped out. Bears knew that, so bears are buying back shorts 50% and selling pullbacks. The bears are not getting consecutive bear bars. And this is the dominant feature, so I think we'll get back up here. So looks like a leg in a trading range. If it's a leg in a trading range, we'll probably get a bull leg in a trading range. So if I was long, which I would not be, I would get out of shorts definitely below here. Second entry short, possible final flag. Usually when you get a low 2 and you're low in the range, it's testing this, so it's a breakout pullback. Best stop entry of the day. We're testing it. Probably the final flag. I would not be selling down here, but I would like a better buy signal. So I'm not all that interested in buying. However, we're starting to go sideways. So the bulls are accumulating buying pressure. So I think it's okay to be long, stop down here. And then, maybe you buy above this bar, but if you do, stop down here, not here. And, maybe you get out of shorts here. It's kind of a wedge top, 1, 2, 3. Not a great buy. But I don't think you have to get out of longs. Again, I think the stop's down here. And if you're long and you get out of shorts, you buy again here. This is a much more credible buy than this. Again, tight channel, trend line break, test of the lows. And you call it a double bottom, major trend reversal. I wouldn't. I just think it's really a breakout pullback, but it is a double bottom. So, do you get out of shorts here? Well, you can, but I wouldn't. And sideways for quite some time. Probability definitely beginning to be back to neutral. And you can see it looks like the bulls are going to win here. So reasonable buy here. If you don't, you can buy this close, and you can see what happened. Traders are taking profits back at the high closes. And there we go. So, you can argue we're channeling up and we got a bull breakout of a trading range, measure move up. And that was the day for here. So I'm going to kind of speed it up. Over here, we could not break above the high, second entry short, sell the close, but low in the range. And that was the end of the day. All right, so over here, very tight channel down, reasonable buy, but not a great buy because very tight channel. And you don't know if this is just a breakout pullback and will lead to a short. It's an okay buy, but if I did buy, I'd be quick to get out of shorts. I would definitely get out below bear bar, such as that. So, trying to form a double bottom, but tight channel, outside down. 4 consecutive bear bars. Bulls trying to get a second entry buy. However, here they failed to trigger. That's kind of one of those. I always think that's interesting. I think that was a credible buy. It's a low probability buy, tight channel, 4 consecutive bear bars, but it's credible. However, it also tests the resolve of the bears. The bears were able to prevent the bulls from triggering the bar, which caused all the traders front running to get trapped on this bar. So strong breakout, probably, but terrible follow through, probably at least a small second leg down. In general, I'd personally get out above this bar. I don't like how big it is. I think we're going up to the high of this bar. So I would get out of longs right there. If I didn't get long, where would I get long? Any of these bars. You can see right here, low and short. So many bulls tried to buy that they couldn't, so we made a double bottom. I'd buy above here. A short, but strong buying, probably in a trading range, probably a higher low, second leg up, first target, open of the day, high of this bar. So if I went long, again, I'd get long here. No reason to sell. 3 pushes up, 1, 2, 3. Probably best to get out of shorts. I think this is minor, very tight channel. I would definitely get out of shorts and look to buy some sort of retest of the lows. So, this is one of those problems. One thing Al talks a lot about, I think he talked about it on this day. Someone asked this question. So maybe maybe the same person's watching that video. However, their question was in a swing environment or an always in, and you get out below bear bar, how do you get in when you don't get a good stop? Well, one way is if you get out below bear bar, you buy above the bear bar, worst case. So you get out and then you buy at this high. I don't like to do that, but the problem here, that's reasonable though. The problem is small pull. We're trying to form a small pullback bull trend. We're not getting gaps. Maybe a gap here, but this is very weak. It's much easier to sell when you get this. I'm sorry, it's much easier to buy when you get this. Hard to buy up here. Tight channel. You don't know if this is just going to be, I still think this is going to be, some sort of leg in a trading range. But it's okay to buy, but I'd be quick to get out of shorts, out of longs. Maybe you buy there, probably will get a second leg. I'd only buy here if I could throw a stop down here. And, I don't know, do you get out right there? Probably not. Very small bar, so small risk, low probability. And we're just channeling up, very tight channel. So no real reason to get out of shorts. Stop far away though, probably down here. Although most bulls would get out quicker. Reasonable to get out here. However, again, I don't think you have to. Very tight channel, very, probably always in long at this point. Okay, now this is important. What are we doing here? Tight channel. We're gaining strength. We're building momentum at a new high of the day, late in a move. This is, well over 20 bars. Well, probably 30 bars. Now I'm just curious because I just want to know. 33 bars. Therefore, probably exhaustion. So if you didn't get out below here, probably leads to a second leg up. Definitely got to get out below that bar. It's an okay sell for a test down here. Notice I said test. I didn't say major reversal. It's minor. So anybody buying here is going to be very quick to get out of shorts. And look what they did. We tested the moving average. So do you have to get out of shorts above that bar? I would. I don't think you have to for consecutive bear bars, but I think it's awfully dangerous to hold long. And we tested up here. So, and what are we doing right here? Well, we're building selling pressure. So if you think about it, a trend, it's easier if I can kind of describe it like this, because I'd rather use this sell-off right here. This is a bear trend. This is an extremely strong trend line break, and this is a retest forming a higher low major trend reversal. Let me do the opposite. Over here is a very tight channel, and here is a trend line break. However, it's really only 2 bars, 4 bars down, not a lot of selling pressure. So, it's not a great, it's a sign of strength, but the bears need more, such as sideways price action. Look at this trend line. What's happening here? It's getting further away. So we're breaking the trend line by going sideways. Therefore, the bulls are now beginning to wonder, along with the bears, are the bears strong enough to get a swing trade? Are they strong enough to get a major trend reversal in some sort of pullback? Maybe they sell here, double top, major trend reversal, maybe 40% chance they get a sell-off. I don't know. I don't like to sell directly above the moving average. We're very close to it. I wouldn't sell here. I'd wait for more signs of strength, but it's an okay sell. And look what happened. You had a high one buy. Bulls couldn't even trigger it, I don't believe. So at this point, you're probably going lower, strong enough, 3-4 bar micro channel, probably at least second leg down. And then we got a 50% pullback, bad stop entry buy. that's kind of a tough one. Do you get out of shorts here? I don't know. I would, even though we're pretty much at the highs of the day. And it could very well could be a trap. It probably is a trap, but it's also the end of the day. Well, it's the end of the day, so I would definitely get out because it's the end of the day right there. It's hard for me to see. I don't know if this shows up on the videos, but I cannot. There's a icon here where my mouse is, and it blocks the date, some of the time, and I kind of forget what time we're looking at. So, anyways, I'll review the next day real quick. Bar 1, 20% chance low of the day. Bar 2, reasonable stop entry buy. 20% chance, again, it's low of the day, but an okay buy. And if you did buy it, I'd probably get out of shorts here because, again, 20% chance, this is the low of the day, which means 80% chance it's going to fall below it, which is what we're doing. And you can see, look at the open of that bar. As soon as this bar closed, everybody sold, and then traders sold again because they knew the probability was really high. We'd at least go down to here. And so with yesterday, 50% pullback. So you have to be thinking 50% pullback probably will test up here, which is what we're doing over here. So not really, no great swing trade yet. Low one short, but I'm also, you got to be wondering, maybe they'll break out below a double bottom, test of the low of the day. Reasonable stop entry buy. It's an okay buy, but a lot of overlap. Not a great stop entry. Not a great signal bar, but it's an okay buy if you're quick to make decisions. So strong entry bar, terrible follow through. A lot of traders will get out below the bar, and you can see why. I probably would get out of shorts even on the close of this bar, and I'd just look to re-enter. I'd like to think I'd get out below this bar though. So another failed breakout, many ways, many three pushes. You can say 1, 2, 3, bear breakout, 2 legs down, 1, 2. I'd really just say 1, 2, 3, or 1, 2, 3. 50% pullback, but no great stop entry yet. Low one short, probably buyers below. There's a decent stop entry. So in the bottom portion of the range, we're building a lot of buying pressure at the 50% line from this low to this high. Decent buy, strong entry bar, decent follow through, probably at least 2 legs up. And if the bulls are lucky, we'll break above these highs. So tight channel. I would get out of shorts below. You don't have to. Probably will get a second leg up. However, I just don't like 2 legs up. Decent bars, but not great. And, I just could be a second leg trap. So I'd rather get out and just look to buy again. And, this is kind of why. So, odds where you get a second leg, which we did. You could buy again right here. However, what is this? Look to the left, trading range. Some bulls are going to say, some bears will say, oh, well, it's trading range. Therefore, we're in a bear channel, which we are. The major stops up here. Second leg up. We're in a broader bull channel, bear channel. And now we're going to sell off test here, but we're not above these highs. So strong enough breakout. Could be exhaustion, probably is exhaustion. One thing I always think about is this right here. These bars. 1 second, let's see something. So 12, 54. Okay, that's a little off, but one thing that happens a lot when you see these stop entries in a trading range if it's a reasonable sell. A lot of traders will sell it, and they'll sell more, sometimes 3 points higher, 4 points higher, or 30 cents higher, or 40 cents higher, which is exactly what happened up here. So if your entry, the low of the bar is 12, technically your entry is 11. If you can sell 30 cents higher, and you'd gotten filled. Either way, I don't think that really matters. More importantly, we broke above this high. We found sellers. Bears made money. Breaking above here, bears are probably going to make money. If I was not out of shorts below this bar, I would just pick a bar, this bar, this bar. But you got to get out of shorts because we could very quickly fall below these lows if this is exhaustion. And I think it is. So here, tight channel. If I was short, I'd definitely get out of longs. I would definitely get out of shorts. You can buy. It's credible buy, 50% pullback. However, not a great buy. We may just test this close and start to go sideways. But it's okay if you're decent at managing. If I'd do anything, I'd buy. Sorry, my voice is getting tired. I would buy, put my stop down here. And that's exactly my issue with buying. Is, again, probably a test up here. So I would definitely get out of longs. I would really, really try to go short. That's why I don't necessarily like buying a second entry in that side of a channel. This whole thing looks like a leg in a trading range. And look what happened. We drew this trend line right here. And we drew it down here thinking, hey, maybe it's a bear channel. We tested it, turning down. Might be the best trade of the day. So lots of bears, lots of selling pressure. Went below this low, 2 legs down, tight channel. Probably not a reason to get out of shorts yet. Tight channel, probably second leg down. Probably will test down here. So now, we're trying to get a lower high. You can call it a lower high major trend reversal. Bull trend sideways for many bars. Left shoulder, left shoulder, head, right shoulder, head and shoulders top. If you sold, you could probably put your stop above this bar. If we're going to go down, we should not go above it. So I'd probably tighten my stop. And I believe this is a Fed day. It's therefore a little different than other days. You definitely want to be out of the market around 1 o'clock. So at this point, like I said, I'm not paying a lot of attention to the time right now because I'm reviewing the chart. I would just be out of shorts. So really, if I was selling here on a Fed day, I would get out probably here. I just want to be out of the market. You don't want to get in a position where you're down or you don't want to give up profit. Better to get out. So, was this Fed day? I may be wrong, actually. Oh, whoops. I apologize. I'm getting my days mixed up. I saw this doji thinking it was the start of a Fed day, and when it was last week. So, again, I take that back. You could be short, stop up here. Difficult to hold short, though. Multiple pushes down, 1, 2, 3, 4, 50% pullback. We went below my target. I would get out of shorts here. Aggressive traders can buy, but not a great buy. Tight channel. If I was long, stops down here. So a little bit of a surprise bar. It's if I was long, I'd probably get out of shorts. I'd probably just take any loss if I was long here from buying here. Oh, well. So anyways, I think we'll get a second leg down. So I would just take the loss if I was long. So lots of sideways. And notice right here what happened. Failed to get above that lower high. And then a strong gap up on the next day. It's probably Friday. I'll review this day real quick and then I got to go. So strong gap up. 3 consecutive bull bars, 20% chance low of the day, far above the average price, moving average. So I'd be very quick to get out of longs, such as over here. 3 consecutive bear bars, 4 consecutive bear bars. All sell the close, always in short, probably testing down here. Make it a bear trend. Very strong breakout. You have to be open to the possibility. Here's the trading range. Then we broke below the range on this bar, so maybe that's the start of the breakout. In hindsight, that's what the market deemed it as. No way I'd buy above that bar. If anything, I would sell. But if you got out of shorts because you think we'll make it back to here, you got to look to sell again, probably below that bar, but stop up here. And when we had a channel down here, we're increasing in strength. We're getting a bear breakout below a channel, as you can see. So it's more parabolic in nature. Therefore, odds favor a failed breakout and exhaustion. So definitely, and we're at a moving average and back in this range. Definitely have to get out of shorts. Very reasonable to buy. Or wait for 2 decent bull bars, 3 or 4 smaller bars. Here, 3, 4 consecutive bull bars, probably always in long and going higher. No reason to get out of shorts. No reason to get out of longs. So, funneling up at the top of here. You always have to be wondering on a day like today, was this some sort of parabolic sell-off and just a sell vacuum test of the yesterday's close, maybe a higher low major trend reversal on some other time frame. If I zoom out, well, it's not really that, but maybe broad bull channel, it doesn't matter. Like I was saying, you always have to be wondering somewhere over here if this is, are we going to test the high of the day? We have the open of the day up here. So far, a lot of trading range price action. I do not think we're going to do this and get a double top bear flag measure move down. Therefore, I've got to be thinking maybe we'll do the opposite and try to, test up here. Very tight channel. So strong breakout back at the open of the day. So we're back at resistance. Probably a small second leg, but probably not much more than that. And at this point, I would just definitely be looking to get out of shorts. Odds favored at least a small second leg. Now we have 3 pushes up, 1, 2, 3. Try to get a new high of the day. I'd get out of shorts here. Would I sell? I think you can. Betting we get down to here, but I don't think the math's that great. Clearly not, because there's only 2 bars left. Okay, as usual, like I said, I'm going to try to start making more videos, probably 5 a week. Or I may do a longer couple of videos on the weekends. For questions, my preference is if you have a basic question you want to ask, you can leave a comment. My preference is that you go to the Brooks Price Action website. For all you there should be a link in the actual description of the video. However, it's just let me do it. Just do it like this for y'all. Even though I'm sure most people probably are aware of the Brooks Price Action website. Whoops. I've got all these hotkeys set up so it kind of messes with everything. Well, unfortunately, TradeStation will not let me type on it, so let me just do it like this. Alright, so it's So if you want, you can find, I'm somewhere, I post stuff pretty frequently, video-wise. My preference is you message me there. If you have a question, just leave me a private message. It's more obvious and I'm less likely to miss it. If you want, you can email me. Well, actually, I prefer you just leave a comment or go to Alice Price Action, find my username, and comment there. Either way, either one should work.